Let's talk about commodities now, where we have seen the gains continue, especially in the metal segment there. The gold price is still holding around those 2-week highs. It's off the kind of levels that we saw yesterday in sense of 1695, but 1690 or thereabout is how it's trading in the European markets. Same is the case with silver, $31 an ounce for that one as well, 2.5% up now in 2013 for silver prices. Take a look at the base metal space, though. We have seen good 3 to 4% of gains coming in across board in all of those base metals for 2013 now. Nickel prices, which had declined 7% in 2012, are 2.5% up in 2013. Same is the case with copper. That's a near 2.5-month highs coming in for that space as well. The Chinese PMI numbers have been positive. The US budget deal has gone through. The dollar index is still trading on the lower side. So all of those factors really making it as a perfect recipe for some more gains coming in, at least in the near term. How do you trade all of that then in the intraday market today? For that, let's go across through Dharmesh Bhatia. He is Associate VP, Kotak Commodities, and he joins us live on the show. Dharmesh, hi, welcome. Let's start with the precious metal space then. And the last 1 week, this week especially, has been quite positive starting for the gold prices. Do you see the gains continue?
Definitely, I'm expecting the bullion, especially gold, which is actually holding around $1,700. I'm expecting the price to breach that level very soon. The last year, if you have seen November, December, usually year on year, there is some profit booking, and this shows some 2,000 rupees downside. But I'm expecting again the market in January, maybe after 15 Jan, you can see a bull run again. Short term, I'm expecting price to maybe trading around $1,700 to $1,750. Domestic market, if you have noticed, it is holding around 30,000 and is again bounced back to 31,000. The main reason is rupee. Again, rupee is unable to get stronger about 54 level. So until that level is breached, I don't think any negative sign will be there in domestic market. And I'm expecting a short-term bull run maybe around 30,350 to 31,400 level, very immediate target.
Dharmesh, you must have been talking to some industry participants. The kind of rhetoric that has been coming in from RBI and the government as well, talking about curbing gold imports and making it a more organized market, perhaps banning the private players from importing gold, giving it completely to banks. How is that impacting the sentiment? And is that the reason that is adding further premium to gold prices in spot markets future perhaps?
I don't think so. Actually, their main purpose is to the fiscal deficit which is created by gold and crude. See, we cannot stop importing crude, but then gold, they have to reduce it. But they have to implement some kind of a system where gold reserve will be there increased. We can't import that much of gold, but as of now, if you have noticed, the difference, the gap between the current gold and international gold is almost like in 1 kg is 2 lakh rupees. So it can increase the smuggling things. But I'm not expecting that government will implement that very soon. Maybe short term, you can see market again bouncing back, and from 4 to 5% is hardly margin, 350 rupees gap of 1 kg. So it doesn't matter. Maybe around 6-7% I'm expecting market will import price on import duty. So short term, I'm expecting price to be around 31,500 to 32,000 levels.
Well, absolutely. It's a second straight day when you have seen all of those statements coming in from RBI directors, and that they are looking at putting in import duty. And as you pointed out, Dharmesh, from 4% in current, 6 to 7% is what it can go up to. And of course, organizing the sector much more or discouraging rather more physical buying in gold is something that they are looking at into the markets there. But Dharmesh, what's your sense coming in for crude prices now? Because NYMEX has been trading much on the higher side. Nearly $93 per barrel is what we saw the prices touch in the markets yesterday. What kind of levels are you working with now?
With fiscal cliff cleaning off, I'm expecting again the market to boom, maybe especially NYMEX crude, which is actually trading in discounted compared to Brent crude. The gap between both of them, I'm expecting the price to be shrinking. So the domestic market will get some positive signs, especially MCX, and you can see my price almost trading at 1 year high, 5,000 level, which was psychological resistance, has almost breached and is holding about that level. And with rupee getting weaker, you can expect the price maybe creating new highs. So 5,200 to 5,300 level you can see very soon. So in international market, $95, which is the immediate resistance, market will break that, and $100 psychological you can see very soon. So buying on dips will be a good strategy for crude oil for short term.
How do you also look at the base metal prices? Because it has been positive data from China. The US, the budget deal going through is also something that has been adding more premium to the prices there. What's your sense coming in for the lead, zinc, copper kind of metals now?
If you have noticed, all the base metals trading almost like 1 year high, internationally also in domestic also. With all things clearing off, I'm expecting price to go further high. Especially the king, which is called copper, which is holding around 8,000 LME. I'm expecting 8,800 to 8,900 level very soon. And just because of rupee, market is not able to trade currently in domestic market, and it's holding around 430, 445 level. Short term, I'm expecting price to get around 475 for 480, maybe in a span of this quarter. So buy will be advisable for short term in base metal market.
How about the lead prices? Because the last year, if that was anything to go by, the fundamentals have continued to be on the positive side. Even now, as we step into 2013, what kind of levels would you watch out for there?
If you've noticed, lead was trading around the cost of production around 2000 level in last quarter, but this quarter you can see a boom in market, and today almost price almost 2.5% up. In last 3 days, market has given almost 8 rupees rally. Right now, I'm expecting some profit booking can be seen around 130 level, but again you can see a bull run in the market. Maybe short term, I'm expecting 2,600 to 2,700 in LME, and domestic market you can see 140, 145 level for short term. So I would suggest you go on buying on dips on advisable for around 130 levels.
Dharmesh, all the markets haven't opened as yet, and as they start participating, especially from Asia and much of that Europe as well, what kind of re-weightages are you expecting? Because if you look at the previous year, we have seen perhaps zinc and lead do much better, not so much for copper and aluminum, nickel for that matter as well. Where do you see more weightages coming in for this year, whether it's going to be agri or non-agri, and what all do you expect in those sectors as well?
I would prefer non-agri, especially bullion, base metal market. Currently, if you have seen last year, it has not performed that much, but this year the rally started with a green signal. And for short term, I'm expecting with economic booming across the world and money supply is constrained has been resolved. So short term, you can see energy and base metal market to boom. Maybe first quarter, you can see a very positive sign. Maybe 7 to 8% return you can expect in first quarter only.
Dharmesh, we haven't spoken about silver at all, and last year that was that metal really outperformed gold, and this year also the way we have started 2013, the last 2 or 3 days till time, we have seen silver prices jump up more than gold. What's your sense if you had to choose between the one of them?
I would still go with gold because silver is 50% base metal and 50% bullion. And if you have noticed, silver has not breached the previous top, and gold has already created a new record high, international and domestic market both. Silver, until market will not breach around $36, $37, which is a crucial level, and market has been bouncing around that level for past almost 6 to 7 months. I would not suggest you to go long as of now. Domestic market, the main reason why silver was higher because of rupee constraint, and if rupee gets stronger and with gold importing restriction, and price will see some decline in INR, you can see price below 54, then you can see especially silver crashing maybe around 50 to 51,000 also. So I would suggest you to short term you can expect at least 7 to 8%, but I'm not very bullish on silver price.